Historically, US stock markets have been very inefficient at discounting macro events that subsequently cause major market declines. This is important because major market declines represent the single best opportunity that individuals investors have and institutional investors have to achieve long-term outperformance relative to the market. In this video, I'm going to describe why it is that the US stock market is about to experience a very major market decline. And more importantly, I wanted to explain to you how it is that you can take advantage of this. My central thesis is that the global economy is about to experience a major oil price shock. And in this video, I'm going to describe historically what has happened when there have been major oil price shocks. And I'm also going to explain why it is that I believe that we are on the verge of experiencing a major oil price shock. The first thing that I want to do in this video is go over the history of oil price shocks so that you can understand how important this is for the US economy and for US financial markets. Since 1945, there's been about 10 major shocks related to the oil markets from a supply, demand, or a price perspective. Now, out of these 10 major shocks in the oil market, they were associated with 8 business cycle recessions. In other words, oil shocks either caused, triggered, or greatly contributed to 8 business cycle recessions in the United States. And the other 2 shocks didn't actually quite cause a business cycle recession, but they caused major slowdowns that almost resulted in business cycle recessions. So oil price shocks have a tremendous impact on the economy. Now, as might be expected, they also have a tremendous impact on financial markets. The median peak to trough decline in the S&P 500 that's been associated with a major shock in the oil market has been more than a 20% decline. The least severe decline that's been caused by a major oil shock since 1945 was about 15%. But there have been several oil shocks that were associated with major bear market declines of over 30%, 40%, or 50%. But the median has been over 20%. So it's very important to understand that an oil price shock generally creates a big impact on the macroeconomy, and it also tends to create a very big impact in the stock market. Now, those of you who are subscribed to my services know that for several months, I have been writing in a great deal of detail on why it is that I think that the world is about to experience a major oil price shock. I have also posted several lengthy, very detailed videos where I outline my thesis as to why I believe an oil price shock is very likely. And I really encourage you to go through the videos where I outline this case in great detail. In this video, I'm only going to provide a very brief outline of my thesis as to why I think a major oil price shock is likely. Now, the main reason is that I believe that it is highly likely, with a probability of well over 50%, that there is going to be an all-out war between Israel and Iran. So first of all, why do I believe that it is likely that there's going to be an all-out war between Israel and Iran? This has to do with the fact that Israel's leaders have 2 major strategic objectives that cannot be accomplished without an all-out war. The first major objective that they have is to destroy Iran's nuclear capabilities so that Iran does not become a nuclear power. The only way that Israel can guarantee that Iran does not acquire a nuclear weapon is to militarily take out its nuclear infrastructure. And if Israel goes ahead and militarily takes out Iran's nuclear infrastructure, this will mean that there will be an all-out war between Iran and Israel. The second reason is that Israeli leaders have decided that it is essential for them and for the existence of the Israeli state to get rid of the Islamic regime that currently leads Iran. Many Israeli leaders believe that as long as this Islamic regime is in power, it will pose an existential threat to Israel. So that even if Israel defeats Iran militarily in a conflict and this regime stays in power, they will be coming back 2, 3, 4, or 5 years from now and posing an existential threat against Israel. So Israel has decided that it really needs to do something very drastic in order to create a situation that will enable regime change in Iran. And again, this is not going to happen unless there is a severe military defeat that is suffered by the regime, unless a lot of the leadership of the regime is taken out, and unless such chaos is created in Iran that other groups can come to power. And this isn't going to happen without a major war. So therefore, the end game from the Israeli strategic point of view is that there has to be a major war with Iran, and that it has to be soon. Because as I pointed out in my other videos, if there's going to be a major conflict between Israel and Iran, it needs to happen now while Israel still has the strategic upper hand. This is the thinking of Israeli leaders. They believe that a conflict with the Islamic regime of Iran is inevitable in the long run. So if there's going to be a conflict, this conflict should happen now while Israel still possesses a strategic upper hand. So the next question that I need to address is, why would there be a major oil price shock simply because there's a war between Iran and Israel? It's not because of the oil that Iran possesses. Iran only exports roughly 2 million barrels of oil per day into the global markets. Now, this is a very significant amount of oil, and taking out these exports from global supply would create a significant effect on prices, but not an effect that would be significant enough to cause a business cycle recession or major declines in global stock markets. The reason is that in the event of a major war between Israel and Iran, this is effectively going to mean that Iran is not just going to be fighting against Israel, it will be fighting a war also against the United States, which is committed to Israel's defense. In that sort of a scenario, Iran will be facing a certain military defeat. And in that scenario, in order for the current regime in Iran to be able to perpetuate itself in power, what it is going to try to do, and I've explained this in detail in some of my other videos, is that it is going to blackmail the global economy by blocking all commercial traffic from passing through the Strait of Hormuz. This is something that Iran is capable militarily of doing. Iran has also talked about striking at oil production facilities and oil transport facilities throughout the Middle East in order to stop the flow of oil in the Middle East towards the rest of the world. Now, roughly 20% of global oil supply passes through the Strait of Hormuz. So if the Iranians block passage of commercial traffic through the Strait of Hormuz, which is something that they're very capable of doing, and I've explained why in my other videos, then this will cause an oil price shock that will be similar to or even greater than the one that happened in 1973 as a result of the Arab oil embargo. In 1973, oil prices quadrupled as a result of an oil supply shock that amounted to about 4% of global supply over a 3-month period. That's just 4%. About 20% of global supply passes to the Strait of Hormuz. So the potential shock to global supply that Iran could bring about is greater than the supply shock that was caused by the Arab oil embargo. Again, Iran won't block the Strait of Hormuz or won't attack oil facilities in the Middle East lightly. They're not going to do that for let's say a minor reason. They would only do that in the event that there's a major war between itself, Israel, and the United States, where the Iranian regime feels itself to be existentially threatened. But if it feels itself to be existentially threatened, this is the one ace card. It is the one strategic advantage that Iran can take advantage of to try to blackmail the world into getting Israel and the United States to stop its military actions and attacks on Iran. There will be so much pressure brought to bear by all countries around the world and the attacks on Iran in the event of a major oil price shock that the Iranian regime is counting on this leverage that they possess to be able to preserve themselves in power once an all-out war gets going. Now, this is a scenario that's not all that speculative. Iran has been preparing militarily for this scenario for well over a decade. They're well prepared to pull this ace card. And as I said, I believe it is highly likely this is actually going to happen because I believe that an all-out war between Israel and Iran is virtually inevitable in the next few months. And if I am correct that an all-out war is going to break out between Israel and Iran, then Iran will very quickly resort to this ace card of blocking the Strait of Hormuz and perhaps attacking oil facilities in the Middle East, because this is the tool that they have to bring international pressure to bear to essentially stop attacks against Iran and for the Iranian leadership to be able to save itself and perpetuate itself in power. Now, I'm going to speak briefly about why this is such an extraordinary investment opportunity and how you could try to take advantage of this opportunity. It's very rare that markets are inefficiently pricing things, but one place where historically markets have proven to be very inefficient is in pricing major macro events that are about to impact the macroeconomy. We saw this in many instances historically. I'm just going to name three of them very quickly. We saw it in 2000, right before the tech crash. Many people understood that there was a bubble in tech prices and that this was going to end up having to get resolved by a major crash in the US stock market and particularly in the tech sector. And despite the fact that many experts and many knowledgeable people understood that there was going to have to be a crash, this crash happened more than a year after it was pretty clear that such a crash was probably going to happen. Again, we had a similar situation, probably even more dramatic, in 2007, 2008 with the housing crisis. It was very clear by 2007 that the housing market was crashing, that the mortgage securities market was crashing, and that the entire U.S. financial system was in dire jeopardy. And despite the fact that knowledgeable analysts understood very well that the U.S. financial system was about to collapse, stocks continued to rise for over a year after it was evident what was going on. So therefore, the market discounted this very inefficiently, just like it had discounted inefficiently the fact that there was this stock market bubble going on. And then the most recent example of an inefficient discounting of a major macro event happened during COVID. Many of you know that 2 months before COVID, I was speaking to my clients and my services in depth about the fact that there was going to be a global pandemic that was probably going to shut down the global economy and cause a major crash in financial markets. And my clients and my services were able to really take advantage of this. And we were actually to attain gains at some point in our portfolio that were over 2,000% as a result of this inefficiency in the market and the fact that we were able to spot it well over a month in advance. What's happening right now is somewhat similar to these situations, because if you objectively listen to the strategic objectives of Israel's leaders, if you look at what's going on with this conflict, although there's not an absolute certainty that there's going to be a major war between Israel and Iran, there is a probability of well over 50% that there's going to be an all-out war between Israel and Iran. And yet, financial markets aren't discounting this at all. The U.S. stock market is almost at all-time highs, and oil prices are not discounting this sort of scenario at all. So therefore, we have a situation where the market is providing us as investors with a tremendous opportunity to take advantage of this inefficient pricing, this mispricing of risk. This is a type of unique opportunity that only comes around roughly every 10 years, but it does happen. And this is the opportunity that individual investors have and institutional investors have to take advantage of a very major decline in the stock market. Now, how do you take advantage of this decline? I can't get into all the details here, but I have two services where I have two very different types of portfolios where I'm going to be capitalizing on this for myself and on behalf of my clients. The first portfolio is a portfolio called Successful Portfolio Strategy. It's a portfolio that I offer through the CE Alpha marketplace service. It's a more conservative portfolio that invests in stocks and ETFs. This portfolio does not invest in any kind of options. A second portfolio that I have is called the Crisis Opportunity Portfolio, and I provide a link here to this service. And this service is much more aggressive and attempts to create much bigger, much more spectacular gains from this particular scenario if it actually materializes. So investors can try various different approaches, and I have two services that are going to be implementing very different types of approaches using different instruments in order to try to take advantage of the major market decline initially, but then also the recovery from this major decline. Because after every single major decline in markets, there's ultimately a recovery, and a lot of money can be made from both the decline and the recovery. Again, this is a unique opportunity that usually only comes around on average once every 10 years or so. So I really encourage all of you to really prepare yourselves for this opportunity and to check out my services to see if those might be appropriate for you in helping you create a strategy of your own and to make investments of your own that are appropriate for you to take advantage of this very unique opportunity. Finally, I want to invite all of you to subscribe to this channel because I've been covering this issue for a number of months, and the pace of my coverage is really going to pick up in the next few weeks and months because I think we're very, very close to the kickoff or the start of a very major war between Israel and Iran. And this is going to be creating massive opportunities for investors in markets. And I'm going to be here on this channel following all the details of this potential crisis very closely, but more importantly, talking about how it's going to impact the global economy and talking about how investors can take advantage of this situation. So please subscribe to this channel, and I'll see you next time.